Okay, good afternoon, everybody. How are we doing today? If I can get a quick audio and video, we're good to go, Craig. Okay, thank you very much. I appreciate that. Hope everybody had a good weekend and a good trading morning today so far. If you've been trading, you see that the markets were pretty crazy this morning. We had all kind of good movement there. Hey, Mike, how you doing? Good to see you guys. Yep, had a good morning in the market here. A lot of movement going on. Hope you guys were able to catch some of those good moves here, and appreciate you joining us here today. I'm going to get our make sure we're all good to go here on our screens. Let's see here. Craig, you can see the PowerPoint and the screen's all good here. Just making sure we are good to go. There we go. All right, let's get our recording going. All right. Okay, well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and appreciate you joining us today. We're going to have a shorter webinar today, and I'm just going to cover real quickly a little bit about what we're going to talk about today is premium collection with Nadex binaries. I'm going to kind of briefly cover that with you today and then show you where you can go to get some more information on that. And Chris Smith says, hey, I'm a little confused about Nadex. And Chris, I'm going to show you here in just a moment a couple of places you can go to get some free education about the different products that Nadex offers. I'll show you guys where you can go, whether you're a vet, if you're a veteran and you want to look at some advanced strategies, I can point you in that direction here. Or if you're brand new and need to get some of just the basics of, what are Nadex binaries, what are Nadex spreads. I'm going to show you where you can get some of that information here, Chris, in just a moment. So let's knock out our disclosure so we can get moving forward here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Also, keep in mind that during this presentation, it's for educational and informational purposes only and does not take into account your objectives or financial situation. Any examples you see me give of a trade example or an entry example, that's in no way a trade recommendation whatsoever. Just simply me trying to get across the point that I'm trying to show you here about collecting premium with Nadex binaries, how to use the Nadex platform, how to enter and exit orders, just for illustration, educational purposes only, in no way a trade recommendation. And past performance not indicative of future results, and in no way a solicitation of an offer to buy or sell any financial instrument on Nadex or elsewhere. Okay, so my name is John Skelton. I'm with apexinvesting.com. Apex and Nadex, two complete different separate companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We have over 20,000 members. We've got different strategies and systems. We focus a lot on risk management and probability. That's why we love the Captorist Nadex products. And we're traders just like you. We run these webinars for Nadex just to give you some free education about, who is Nadex, how do their products work, give you some ideas on some different ways that you can incorporate them into your trading. And I've been with Apex now for about 3 years as head of operations. I've got a background in banking and as a stockbroker. And again, I'm a trader just like you. I trade Nadex binaries and spreads every day myself and in our trading room. And that's what we're here for, just to give you some ideas and some ways to take advantage of those products. So again, today's topic, we're going to talk about premium collection with Nadex binaries. And some of you might say, hey, what does that mean? What is premium? We're going to talk about that just a little bit. Talk about what is premium, kind of the difference of, paying premium, collecting premium, and how you can let time work in your favor. And once you have an understanding of that, how to pick the right binary and have a good risk management and trade management plan from there. So not going to be necessarily spending a whole lot of time today covering the basics of binaries, but if you hop on over to nadex.com, and Chris, this will be a great place as well, or anyone of you that are new. If you go to nadex.com, go right here to the Learning Center and go to Webinar Archive. And right here, you can filter by presenter. And if you click down and find us right here, Apex Investing Institute, this will kind of a webinar archive of all the past webinars. If you might have missed any or you missed the last couple of weeks, for you to go back and catch up. But a lot of good stuff in here. You can also, if you scroll down here and go all the way to the end to page 3, you know, there's some great information here about some, you know, trading mentality and top mistakes for newbies and getting started. And then on page 2, if you're brand new to Nadex, I want to direct you to 2 particular webinars here. These right here, Basics of Nadex Spreads and Nadex Binaries 101. Today we're talking about Nadex Binaries. And if you are brand new and any of this might be a little over your head, no problem. Just try to, you know, stick along with us there, but you can also go back and watch this webinar right here, Nadex Binaries 101. This is where I kind of handhold you and take you through the whole process like you've never heard of a binary before. You don't know what they are or how they work. And you can go through and get some very elementary education there on Nadex spreads and binaries. And then you can go through and, you know, watch a bunch of different webinars here about different strategies and systems and ways to incorporate binaries and spreads into your trading plan. Okay, so like I said, I'm not going to spend a whole lot of time on the very, very basics of binaries, but I want to talk to you just a little bit. And for some of you, this might be very elementary. You know, we've talked about it before, or you may be familiar with it. But if you pull up the Nadex demo platform here, and just as an example, let's go ahead and pull up the NASDAQ, for example. And we're going to look at these right here, the 12 p.m. to 2 p.m. binaries. Let's pull these up. And as you see here, we've got some different binaries available, okay? And actually, we're going to refresh this. I'm going to do something a little different. Let's pull up the 1 to 3. Yeah, let's pull up the 1 to 3 so we have some more options here. And you'll see here you've got quite a few different binary options available. Okay, and just in a nutshell, each one of these strike prices right here is a binary contract. And very simply, all a binary contract is simply a statement, right? And this statement right here says that the US Tech 100 will be greater than 53.85 by 3 p.m. today. And that's it. That's a binary contract. It's just simply a statement. All right, and either that statement will or will not happen. If you think that statement is true, then you would buy the contract. If you think that statement is false and the market will expire below that, you would sell that contract, okay? In a nutshell, that is a binary. And once again, you see that there's different binary contracts, there's different strike prices, and there's different strikes and then different prices you can buy each one for. This is the buy side, this is the sell side, all right? And most of you are familiar with out of the money, in the money, and at the money binaries. Okay, and just in a nutshell, an at the money binary would be when the strike price, for example, right here, 53.81, is real close to right where the market currently is right now. Your pricing is going to be approximately around $50. All right, because at expiration, a binary is either worth 0 or 100. So before expiration, you've got some time to expiration. The strike price and the market price are right close to each other. It's going to be about $50. All right, you have out of the money binaries, which are much further out there. You know, like this statement here says the market will be expire above 53.93. Right now, the market's only at 53.82, so it would have to move up quite a bit to expire above that particular strike price, and therefore it's a much lower risk, much lower price to get into that binary. What we're going to talk about today more is in the money binaries. Okay, what is an in the money binary? Well, what does this statement say right here? The US Tech 100 will expire above 53.77 at 3 p.m. All right, so above 53.77. Well, where's the market right now? It's at 53.83. So the market's already above this strike price, correct? So that's what we call an in the money binary. It's already in the money. The market's already over that price. But as you see here, a second ago it was about $75. Now it's $80, right? So it's a little bit higher price to get into that binary. Okay, but why do you think that is? Well, because the market doesn't have to move way up to get there. It's already there, right? So as long as the market stays above that, that binary will expire profitable and will expire being worth $100. Okay, that's what we call an in-the-money binary. All right, and that's the type of binary we want to talk about today as far as collecting premium with binaries. All right, so what does that mean? What is premium? Well, when you think of the word premium, what is one of the first things that comes to your mind of something that you pay every month? Your insurance premium, right? Whether it be for your home insurance or your auto insurance, you think about a premium payment. And what are you really paying there for? What are you paying that premium for to your insurance company? Well, you're paying to be insured. You're paying for some protection, right? Now, you may be paying in every month to that, and you may never use it. You may never get much use out of that insurance, right? But you're glad you have it when you need it, all right? And that's what you're paying that premium for, is to have an edge, is to have some insurance against something happening, okay? So just as an example, let me just put this into terms of the markets. So let's just pull up this chart right here. There's a chart of the Nasdaq, okay? And what I'm going to do is, let's just pull this back up over here. Give me just a second to move this over. And all right, so I'm going to tear off this ticket. Okay, so here's a chart of the Nasdaq, okay, and here's our ticket. So right here, we currently see that the Nasdaq is at 53.80, okay. Well, let's say that we're looking at a binary. All right, we want to trade a Nadex binary. We're looking at the market. And if we were to buy a strike price up here, saying that the market will expire above this price, well, then what does the market have to do? Well, the market has to move all the way up there. The market can only move one direction, right? It has to move up, far enough up here to our strike price, and has to move all the way up there to our strike price in time, right? Has to move by the expiration, okay? Well, let's take a look here. What is the market doing right now, for example? Well, the market has come way up, right? Market's come up a little bit, and now we've got a couple down closed bars. Well, we all know that sometimes the market can shoot up, and then sometimes the market can shoot way down, right? But we don't always know that just because the market went up, is it going to go straight down? Meaning, is it going to go straight down? Is it going to go quickly? So let's look at this from a different angle. Let's say that we wanted to sell the market, okay? Well, if we're looking to sell the market, what would be an in-the-money binary selling the market? Well, we've got this one right here, the 53.89. We can sell it for $15. Or we've got this one right here, 53.85. We can sell for about $30, right? So let's just take a look at something here. I'm going to go ahead and pull this ticket off. We're going to tear off this ticket just to use it as an example. So if I think, okay, the market's come up here, and now I think the market's going to go down. And I'm not saying it is. I'm just using this strictly for example's sake. Well, if I wanted to sell a binary down here, saying the market, I think the market's coming down, so I think it'll expire down here. Well, what has to happen? Again, the market has to come down there, and it has to come down there by expiration, correct? But I don't know how fast the market's going to move, right? Okay, well, let's take a look at this. If I were to sell this binary right here, and I was to sell one contract, what is my max risk, my max loss? $71.75. My max profit is $28.25. Well, where's the market at right now? The market's at 53.81, okay? But where is the strike that I'm selling? 53.85. So let's take a look at it on the chart here. Where would I be selling? Where's 53.85? Right here, right? The chart's moving a little bit. 53.85. So this red line right here. So if I sell this binary right there, let's say the market does keep moving down, okay? And if at 3 o'clock when this expires, the market has moved down, would this binary be profitable or not profitable? Right, it'd be profitable, right? Okay, because all I'm saying when I sell this binary is that the market will expire under this strike price. Okay, so it would be profitable. Now, so if the market keeps going down, that will expire profitable. What if the market just kind of stalls out and stays right where it is right now? Okay, doesn't really go down anymore. You know, it's a lot of times you think, okay, I sold a binary, so I need movement. I need it to go down. Well, if it just kind of stayed right where it is right now and then expired at 3 o'clock, would this binary expire profitable or not profitable? Still profitable, right? What if the market moves up a little bit and at 3 o'clock it expires right here at 53.84? So it's right here right now at 53.81. What if it comes up and it expires at 53.84? Still profitable, right? So now, what if I had gone in here and I sold a binary right here at 53.60.25? What has to happen to the market by 3 o'clock? It has to move down. It has to move down below this level. And it has to do all that by 3 o'clock. So if I were to sell a binary down here, how many options do I have? One, right? I have one option for this to expire profitable. Okay, and that's for the market to move down all the way here, and to move down here by 3 o'clock. Okay, one option. What did I have? How many options did I have up here selling this in the money binary? I had 3 options, right? The market could go down, the market could stall out where it is, the market could even go up as long as it didn't go up past the strike price. Okay, so now, but if I had sold a binary down here at 53.60, down in that area, okay, what would something like that have run me? 53.61, 53.65, somewhere in there. I'd be risking a lot less on the trade, right? What if I had sold a binary at like 53.77? Okay, I'd be risking a lot less on the trade, correct? So bringing it back to the insurance analogy, I am technically risking a little bit more on this one, right? But what am I buying, as it were, for that higher premium, for that little bit higher cost up front for the binary? I'm buying myself insurance, as it were. Does that make sense? I'm buying an edge. I'm buying myself more options to be right. Okay, does that make sense? Yeah. Like Marvino says, it's a higher probability of success. I'm giving myself some more options. Okay, so that is what I mean when I talk about premium, okay, in a binary. And when I talk about collecting premium, well, what do you think we mean by that? Well, I don't know if the market's going to shoot down 200 points. I don't know if it's going to just sit here, but I got a binary up here. So would I like to see the market shoot down just to make me feel a little better about that trade? Sure. But really, what am I looking for here? What is it that I'm really wanting to see work in my favor? Time, right? What I'm really doing by selling above the market, or if it were opposite, buying below the market, is I'm trying to take advantage of that time. And what am I trying to collect? Well, I'm trying to take advantage of time and collect this premium. I'm having to pay a little higher up front to get in it. I'm having to, because again, a binary at expiration is worth what? 0 or 100. Well, this is priced closer to 0, right? And all I'm wanting to do is let time just work in my favor. And as long as the market stays under that level, what's the premium I could collect? This $22, right? Now $25. So that's what I mean when I say collecting premium. Does that make sense? Okay, let's look at it a different way. Let's say that I thought the market was going to go up, right? Let's go back to our other example here, and let's pull up the Nadex platform. Well, look at this binary right here, 53.77. Okay, if I were to buy this, I'd be putting up $70.25. Okay, where's the market? It's at 53.80. Where am I buying at? I'm buying at 53.77. Right? So on the chart, let's just take a look at it. So I would be buying, if I were buying, I'd be buying at 53.77 right here. Okay? Whoop, right there. Right? So all I'm looking for here is for the market to stay above this price between now and expiration. Okay, because I didn't buy up here saying, oh, the market's going to go up, or I didn't even buy right at the money. Like, okay, the market's right here, I'm going to buy right there. I'm buying further down, right? Trying to give myself a little bit of room, a little bit of insurance there. Let time pass, let the market do what it's going to do, so I can collect what? This premium, this $29. Okay? So in one sense, yes, like I said, if I bought it, would I like to see the market shoot way up? Sure. But really all I'm wanting to do is just have the market stay above that price between now and expiration, whether it ends up 1 tick above this strike or 100 ticks above. I still collect this premium. The difference of where I got in to $100. Okay? So does that make sense as far as utilizing in the money binaries to collect the premium? See, let's take a look here. Look at this strike price right here. Okay? 53.89. All right? Let's just go ahead and tear this ticket off real quick. 53.89. Well, where's 53.89? That's way up here, close to this green line. See it? 53.89, right? Close to that green line. So if I were to buy this binary, okay, well, yeah, I've got a max loss of 21 bucks and a max profit of 78 bucks. I like that a lot. Well, is that collecting any premium? I'm paying $22 to get into this trade. If the market just sits right here where it is, what's going to happen to that $22? It's just going to slowly go down to 0, right? Okay, because the market would have to move up there. So that's not collecting premium. This is more of a directional trade. If I was to buy a binary way up here, I would need to be expecting the market to be going up and to move up a good amount, right? That's a directional type trade. The in the money binaries, okay, meaning buying below the market or selling above the market, is collecting that premium. I'm giving the market time and room for me to collect on that premium. Okay, everybody follow me on that one so far? Okay, so now I'm not saying that you can't use these in the money premium trades for directional trading. There'd be nothing wrong with that, right? But you don't want to use the out of the monies to collect premium. The out of the monies are directional type trade. Okay, so I just want to again, I'm going to direct you where you can get some, go through a couple of webinars where we talk about multiple strategies and systems to how to utilize this and some different setups to look for to utilize this. But a lot of people, especially newer traders to Nadex, you know, are really attracted to these out of the money binaries, okay, because of the lower risk. And there's plenty of great times to use those. But a lot of times I'll see people say, okay, well, hey, I think the market's going up, so that means buy. So I'm just going to buy any random low price binary. And you say, oh, binaries don't work. Because look, I bought this one for $53.89 and I only had to tie up 20 bucks. But where is $53.89? Well, it's way up here. So you buy that binary and then what do you see? You actually see the market starting to go up, right? But then you get close to expiration and your binary starts to go down in value and expires at 0. And you say, well, why did that happen? Well, yes, the market went up, but it didn't go up far enough. These premium collection binaries give you a little bit of an edge. Okay, so you have to realize that and not just be always so concerned about, well, I don't want to tie up $75. I don't want to risk $75, or right here, this example. Okay, hey, I don't want to risk $72 to only potentially make 27. I don't like that risk to reward ratio. Okay, well, let's talk about that a little bit here. Okay, first of all, you have to realize that you are giving yourself an edge, a little bit of insurance there, and a higher probability for the trade to expire profitable because it's already in the money, right? But what is the one thing we know? What is the one thing we know about binaries? Well, let's look at something here. Where is this strike price at? 53.80. Where's the market at right now? 53.80. Where is this binary priced at approximately? Sell side 45, buy side 52, approximately $50, right? Because at expiration, a binary has to either be worth what? 0 or 100. So between now and expiration, when the strike price and the market price are right about the same, we're kind of right in the middle there, between 0 and 50, right? Because it's right on the line. Is it going to go one way or the other? So it's priced right around 50 when you have some good amount of time to expiration. So we know that, right? Whether it's 20 minutes, an hour, a day, or a week until expiration, if the strike price and the market are right about the same, it's going to be priced around $50. Okay? So let's talk about trade management a little bit. How would we manage this trade? Let's say that we thought the market was going up and we bought this binary right here for $75. Well, if we buy a binary for $75, what's the most that we can make on it at expiration? If we bought it for $75, what's the most it could be worth at expiration? Most it could be worth is $100. So we would stand to profit $25, right? Now, here's a perfect example right here. If we bought this, we would be risking $73.50 in order to make $26.50. In and of itself, is that a good risk to reward ratio? In and of itself, is it really a good ratio to risk $73 to make $26? Not necessarily, right? Okay, so we don't like that risk to reward, do we? But we like the higher probability because it's already in the money. It's giving us options, right? Okay, so if on this particular trade, we stand to make $26 if it expires profitable. Well, right now, the strike price is $53.76. So we're saying the market will expire above $53.76. Right now it's at $53.79. So it's already above the strike price, right? And all we needed to do is stay above the strike price to be profitable. Correct? Well, what if we're wrong? And what if the market starts coming down? Okay? And what if the market starts coming down and the market comes all the way, not at expiration, but before expiration, the market comes all the way down and hits our strike price? What is that binary going to be worth approximately? We just talked about it. When the strike price and the market are right at about the same, what is the binary worth? About 50 bucks. So, what did we give ourselves here with this particular binary? We gave ourselves room. We gave ourselves an edge, insurance. We gave ourselves 3 different options. The market could go up, the market could stay where it is, or it could come down a little bit and we still expire profitable. And we stand to gain how much? About 26 bucks, right? Okay, or if we bought it right now, about 22 bucks. Well, let's say we're wrong and the market starts to come down and it hits our strike price. What is it going to be worth again? Approximately $50, right? So if we had a trade management plan to exit this trade if it hit our strike price, Ron, I think this will answer your question right here, okay? So if our trade management plan was to exit the trade if it hits our strike price, what would we be exiting for? About $50, right? So if we buy the binary for, say, 75, we could make $25 on it. But if we exit the binary, if it comes all the way down and hits our strike, how much of a loss will we have then? 25. So what do we have there? We now have a 1-to-1 risk-reward ratio. Does that make sense? Because before, if we just held to expiration and didn't exit early at all, we'd be risking 77 to make 22. But if we have a trade management plan to exit if the market hits our strike price, then we're risking about 25 bucks to make about 25 bucks approximately, right? So we have a 1-to-1 risk-reward ratio. Does everybody follow me there? Ron, that makes sense? Although, I mean, you're right. That's still a, that's still a good percentage. Yeah, absolutely. Okay. Ron asked a good question. Would you exit when it hits your strike price if there's still a significant time to expiry, or wait to see if it comes back in your favor? Well, that's up to each individual person, Ron. Personally, I would exit no matter how much time there was, okay? Because I can't tell you, sure, there's times you'll exit it and you'd be like, oh man, now it came back and it would have won. But there's plenty of times where you don't exit and it just goes all the way down and you just lost $77. To where you've been like, man, I sure would have preferred to only lost 25 on that one. You know what I mean? So trust me, I've been there plenty of times where I'm like, I know my rule says to exit, but I'm going to hold on just because my gut's telling me that maybe it'll come back. I want to see what happened. Boom. Because, you don't want to see, oh man, I'm down 25 bucks and I'm just going to exit. I hate seeing that. Well, trust me, you'd prefer to see that than a $75 loss, right? Because think about this. How many times, if you did not manage that trade, if we took this trade right here and we lost all $73 of it, how many more of these trades would we have to win to make up for that one loss? We'd have to win the next 3 just to make up for the loss. So out of 4 trades, where are we at? We're right back to break even, right? We didn't really get anywhere there. But if you hold to that trade management rule of exiting at the strike, you have a 1-to-1 risk-reward ratio, right? Risking 25 to make 25 approximately. So even if you only were profitable on half of your trades, where would you be? You'd be break even, right? If you're risking 25 to make 25, you only win 50% of your trades, only 50% of your trades are profitable, you're still at about break even, right? But what if you could be profitable on 75% of your trades? Then you're in the money, right? And when you take into account that you're utilizing these higher probability binaries already, right? From just a pricing standpoint only, this binary is priced at 70, 72. You can look at those numbers as a probability percentage, right? So if you stick to those rules, you only have to be profitable 50% of the time to break even. But if you can be profitable 70 or 80% of the time, at a 1-to-1 risk-reward ratio, you're profitable. All right? And so just first of all, utilizing the higher probability binaries, and then utilizing whatever strategy or system that you have, that has a, good 70, 80% probability, well, then you're starting to set yourself up for some, possible great success there. When you're using a system that has a 70 or 80% probability, and a binary that's priced at a 70, 75% probability, and then a good management rule to keep yourself at a 1-to-1 risk-reward ratio, that's when everything can really start coming together to add up for you. Okay? Let's see here. Ron says, so you're suggesting to have a 1-to-1 minimum risk-reward ratio as one of our trading rules. Well, I'm not necessarily saying there's any particular rules overall, Ron. I'm saying when you utilize these in the money binaries, okay? I mean, there's some different strategies and systems when it comes to at the money binaries and out of the money binaries and so on, okay? But when you're utilizing these in the money binaries, I think you really have to look at that as a good trade management rule, because when you start risking 75 to just make 25, like I said, one full loss would take you 3 profitable trades just to make up 4. You know what I mean? And you find yourself, spinning your wheels there. But if you can get yourself to a 1-to-1 risk-reward ratio, you know what I mean? And then get your, profitability rate to 70, 75%, then that starts adding up, doesn't it? Right? And that's where you want to be. And that's where you want to look at with those binaries, okay? So, yes, someone asked, I think Ken asked, what market conditions would you consider trading this in? Slow markets, low volume, time of the day? Any time of the day, you can look for these type of trade setups, Ken. Yes, slower markets are a great time to trade them in, where, or what we call a range-bound market. You know what I mean? Well, the market's really not moving a whole lot. We were, we're going crazy earlier. Now the market's just there's not a lot of movement to it. A low volatility time. Absolutely, that'd be a great time to look for that type of trade, because the market's kind of in this little range here, for example, and you want to sell above that range or buy below that range. Okay? Because again, let's say the market's kind of ranging. It's not really trending up or trending down. It's kind of in a range or kind of choppy. You don't really know what direction it's going, so it's hard for you to trade directionally. But if you get under that or above that kind of range there, okay, yes, that's a great time to be looking for those. Another good time to look for these type of trades is a strategy I like to call expiration premium collection, okay? What do I mean by that? Well, let's say that, there's some part-time traders, and I'll show you where you can go and get some more information about some of these strategies. Let's say you're a part-time trader, you don't have a whole lot of time to trade, And, you know, I know some traders that only trade the last, say, 15 or 20 minutes of the hour. What they're looking for is right close to expiration. What is the market doing? And whatever strategy or system, you know, there's a million different strategies and systems out there. Some of you guys use, you know, different strategies, different indicators. Let me see if I can just give you an example. I think I had something pulled up earlier. Let me just use a different, okay, I don't want to confuse you here by this chart here, but a couple different things on this chart here. See these boxes? Okay, these boxes we call our, these are Apex proprietary indicators. We call our expected range indicator. Notice it starts at the top of an hour, about 10 o'clock there, ends at the end of the hour, about 11 o'clock there. All right, that's what those boxes are. And the top, you got the top and bottom, kind of the expected high and low of the market for that particular hour. All right, we've got some other indicators here at the bottom, our volume, accumulation, distribution, and then right here, these different lines here, this is called our trend flip. All right, I'm not going to dig too far into it, but just look at something for an as an example here. This is, what was this, today, or what day was this? 3/22, a few days ago, okay? So in this particular hour here, from 10 to 11, you see the market's kind of coming down here. But now look at the timestamp at the bottom here. About 10:35, okay, we don't have a whole lot of time till expiration at 11 o'clock. Well, I'm seeing on my volume accumulation here, I'm seeing that the down volume was way down here, and then here, and then here. I'm seeing my down volume is decreasing, like it's possibly running out of steam, right? And then I see my green volume starting to come in, and my trend flip to green. So I've only got, what, about 25 minutes out of this hour left till expiration. So what could I have done at this point right here? Let's say I had bought a binary down here in the money. And I don't know if the market is just going to go up 1 or 2 bars or if it's going to come on up a lot like it did. But I'm just trying to ride out that last 25 minutes of the hour, right? Because I've seen the market come down and down and down, and I see it running out of steam. And then towards the end of that hour, I see my indicators flipping back towards the long side. Now, I could have bought an out of the money binary way up here, but I didn't know the market was going to move that far, did I? So once I see towards the end of the hour, my indicator is starting to go the other direction. If I want to go in the money, buy some premium insurance, get an edge, and get a binary down here, I just need the market to mosey on to 11 o'clock and stay above that price, right? Just need it to stay above that price, okay? What about, here's another example, earlier in this particular day. I see the market coming up, see on this big green volume, I see it pop back up on real low green volume, and then right here towards the end of the hour, I see my indicators flip to go short, right? So if I were to sell a binary up here like the top of the range, all I needed to do is just stay below there until what? That 10 o'clock expiration, right? So say I sold a binary up here for like $25, okay? And you can go through and check out your charts, you know, whatever strategy or system you might be using there. You know, an example here, there's only a few minutes left till expiration, and I've got to flip over to the short side. And so I'm selling something up here, higher above the market, just to let it mosey on down to expiration at 2 o'clock, right? Or, you know, even here, we've only got like 20-something minutes left. I see my down volume kind of drying up, and I get a flip to the long side. See, the start of this box is about 2 o'clock. The end of the box is about 3 o'clock. So I'm seeing the short volume decreasing, and I'm just seeing a flip to the long side. I don't know how far it's going to go, so I'm going to buy something down here just to give it some room. Okay, so check out some of those type of strategies there. Yep, somebody brought this up earlier. Another type of strategy is what we call a butterfly. And what that is hey, you know, I don't see the market moving a whole lot. I think it's kind of just going to stall out in between this range. So I want to sell a binary up here saying it'll expire below there. And at the same time, I want to buy a binary down here saying it'll expire above there. I want to buy and sell at the same time. So as long as the market expires in the middle, I actually can be profitable on both of them. I'll show you where you can watch a webinar on that. Okay. Now, real quick here, I want to address one thing, and let's see here, Chuck, I think you brought that up. Chuck says, hey, would it be even better, just in case, to buy even a lower strike? Let's talk about that real quick, okay? So what did we look at right here? If we bought this one, okay, I can buy this. If I'm profitable, I make about 23 bucks, okay, because I bought it at 77. If it goes against me and I get out at my strike, I get out around 50 bucks, so I lose what? How much would I be down? About 27. Everybody follow me there? Right? So risk 27 to make about 23, okay? Well, and so you guys see that, right? You get the power of, you see why it's so powerful of, well, okay, if the market's here, if I'm saying the market's going down and I want to sell up here, I'm giving myself room. But then you say, well, what if I could sell even higher? Give myself even more room to be right. I mean, if I want to look at price like a probability, and, instead of just having a 25%, or 75% probability, why not go in and give myself like a 88% probability? Why don't I go even higher or lower? Right? Because that's the next logical step, right? If I'm going to buy at 78 to give myself room, why not buy at 90? Give myself even more room. Well, let's talk about that, because that seems logical, to give yourself even more room and more insurance. So if we were to buy this binary right here for $90.75, what's the most that we could make on it at expiration? $9.25, right? So what if this goes against us? Where are we going to get out? Well, if we want to maintain about a 1-to-1 risk-reward ratio, are we going to say, well, I can make $9, so if it goes against me $9, get out? Because it might not take a whole lot of little bit of movement in the market for this to go down $9 in value, right? You could see yourself getting kicked out over and over. You say, well, we know that when the strike price and the market price are right about the same, that at the money binary is worth how much? About $50. So we'll still exit at 50. Okay, so what does that mean? That means I bought it for 90. If I get out at 50, how much am I down? About 40 bucks, right? So I buy at 90 and I get out at 50 at the strike price, I'm down about 40 bucks. So I'm risking 40 bucks in order to make what? 9. Are we at a good risk reward ratio? Risk 40 to make 9? Not necessarily, right? So that's where you got to be careful there, is you think, because that's the next logical step. Chuck, I agree, of, oh, well, let's go further to give myself more room. But when you go too far there, you start to limit your potential profit and extend your potential loss, and therefore not quite maintain your 1-to-1 risk reward ratio. Does that make sense? Okay, so guys, just wanted to open your mind up there to a few things. Some of you are still not quite sure about how to utilize these in the money binaries and exactly what is premium collection and how do those work and how do they give me an edge. And if I take them, should I hold them to expiration and take a full loss? If I'm wrong, should I get out early? So I want to just kind of open your mind up to a few things there about how you can utilize these in-the-money binaries to collect premium. And on those days where you're not really sure where the market's going, the market's not moving real fast, it's moving real slow, and you just want to be able to let time work in your favor, okay? And so that's just kind of a brief overview there of how to utilize the in-the-money binaries to collect premium with Nadex. So with Nadex binaries. So let's hop back over to the Nadex website. And again, if you go right here to the Learning Center and you go to Webinar Archives, and right here, filter by presenter, find us right here at Apex Investing Institute. If you want to learn a little bit more about premium collection with Nadex binaries and a little bit more info on some different strategies and ways to use it, what you can do is you can scroll down here, and right here, I want you to find this one, Live Range-Bound Market Trading with Nadex, okay? In this webinar, we talk a lot about those range-bound days where you can utilize the in-the-money binaries. And then right here's another one, Trading Stock Indices Live using in-the-money strategies, all right? We talk about some different ways to utilize those. And if you go right here to page 2, right here, binary strangles and butterflies, okay? Talk about two different strategies there of how to take advantage of those range-bound markets. And again, the butterflies where you buy and sell in the money binaries at the same time, just wanting the market to expire in the middle between the two to be profitable on both, okay? So again, just wanted to open up your eyes and get you to start thinking about some ways to utilize these premium collection binaries. Start playing with them in your demo account and check them out and see how they work out for you. Test them a little bit. Make sure to follow, your trade management and risk management stops there, your manual stops of exiting manually if it's going against you. And then take a look at a couple of these other webinars here to get a few more ideas on exactly how to take advantage of those strategies with Nadex Premium Collection binaries. All right, guys, thank you so much for joining us today. I really appreciate your time. Some great questions back and forth there. And look forward to seeing you next time on our next webinar. We're going to talk about how to collect premium with Nadex spreads, just like Ron, just like you brought up. Yep, iron condors. So today we're talking about premium collection with binaries. Next webinar, we're going to talk about premium collection with Nadex spreads. So thank you for joining us today, and we look forward to having you with us next time as well. Have a great trading week. Thank you so much.